Hi, my name is Rebecca Levitan, and I would like to welcome you to our Burkenroad Reports video presentation covering MidSouth Bancorp. The other analysts on our team are Spencer Harrith, Patrick Murphy, and Blake Netter. MidSouth Bancorp is a bank holding company for its subsidiary MidSouth Bank. MidSouth Bank is a small regional bank that was founded in 1985 by current President and CEO Rusty Clouchet. MidSouth focuses on building strong relationships with its customers and on maintaining a conservative lending strategy. MidSouth maintains capital ratios well above the minimum requirements and closely scrutinizes potential customers before extending credit. Additionally, MidSouth's participation in the Small Business Lending Fund provides the bank with additional capital at an attractive rate. MidSouth has a diversified loan portfolio with a higher percentage of commercial and industrial loans than most other banks of comparable size. MidSouth offers a comprehensive array of banking services to commercial and retail customers throughout the bank's 40 locations in Louisiana and Texas that span from the Dallas and Fort Worth areas in East Texas to Cutoff and Houma in South Louisiana. Here is the historic stock price for MidSouth over the past 5 years. As the graph shows, MidSouth is traded in the range of $9.90 to $14.88 per share over the last 52 weeks. MidSouth trades under the ticker symbol MSL, and as of December 31st, 2011, MidSouth had $1.4 billion in total assets. As of April 3rd, 2012, MidSouth had a market capitalization of $144 million and an enterprise value of $178.7 million. We give MidSouth Bank a market perform rating and project that the stock price will increase by 16.7% from $13.71 on April 3rd, 2012, for a 12-month target price of $16.
Institutional investors own a significant portion of MidSouth's shares. Additionally, MidSouth's insiders own a significantly higher percentage of shares in the company than insiders in MidSouth's peer groups own in their respective companies. This high level of insider ownership is evidence of management's vested interest in the company's health. Also, no company insiders sold shares during 2011. In fact, insiders purchased nearly 100,000 shares in the company during that year. This is a sign that management is optimistic about the company's future and expects future appreciation of its stock price. Within the commercial banking sector, there is a wide disparity in market share between large national banks and small regional banks. At the end of 2011, banks in Louisiana had over $86 billion in deposits. The largest banks were Capital One, with over $18 billion in deposits, and JP Chase, with $14 billion in deposits. Together, these two banks had over 35% of deposits in the state. Meanwhile, MidSouth had $832 million in deposits, giving it a minuscule market share of just under 1%. MidSouth has an even smaller share of deposits in Texas, with a market share of only 0.07% of deposits in the state. Recently, MidSouth has acquired banks in new and existing markets. Additionally, it has leveraged its position as a regional bank by using its consumer-centric customer service model to spur organic growth. Using these strategies, MidSouth has been able to grow its market share despite the tough competition from large national banks.
The size of the Louisiana and Texas markets combined was around $560 billion in deposits in June 2011. MidSouth's competitors in this market include other regional banks and also national banks that have a presence in Louisiana and Texas. MidSouth's peer group is made up of 5 banks that compete directly and indirectly against the company. Like MidSouth, these peers are all regional banks that operate in the southeastern U.S. and focus primarily on commercial banking. MidSouth's market cap is significantly smaller than the market caps of other banks in its peer group. MidSouth's price-to-earnings ratio was just over 50 and was the highest in its peer group, while its non-performing assets as a percentage of total assets were the lowest at around 1%. Also, MidSouth's price-to-book value ratio of 1.14, its dividend yield of 2.04%, and its return on equity of 1.91% in 2011 show that MidSouth has been able to stay competitive with the other banks in its peer group. The regulatory environment in the banking industry went through a complete transformation following the national recession. The Dodd-Frank Act was signed into law in July 2010, and it requires banks to implement nearly 250 rules over the next few years. It also creates the Consumer Financial Protection Bureau, which has oversight over banks, and like any other financial institution, MidSouth will incur costs in complying with the Dodd-Frank Act. Other regulations have been more advantageous for MidSouth. Starting in August 2011, MidSouth participated in the U.S. Treasury's Small Business Lending Fund. This fund provides MidSouth with additional capital at an attractive 5% interest rate, with the potential for a reduction to a rate of 1% in the future. This capital, combined with MidSouth's acquisition strategy, will be important for continued growth.
As you can see, after struggling in the aftermath of the financial crisis, MidSouth's quarterly revenues increased significantly in the fourth quarter of 2011. This significant increase occurred because of a couple major acquisitions. We used a regression approach in order to forecast future revenue. We assumed that 3 loan types will continue to be the primary drivers of revenue: loans to individuals, commercial and industrial loans, and construction and land development loans. Our forecast relies on the assumption of steady macroeconomic growth in the region, as well as a gradual increase in the federal funds rate. We calculated MidSouth's 12-month target price of $16 using the price to tangible book value per share and the discounted cash flow valuation methods. Tangible book value per share is an objective measure that provides a true indication of bank performance, and MidSouth has a price to tangible book value ratio comparable to that of its peers. Unlike a typical discounted cash flow analysis that discounts expected future operating cash flows to their present value, our analysis used net income as a proxy. This generated a more realistic result because changes in the cash account drive operating cash flow, which does not adequately capture the bank's intrinsic value. We omitted the price-to-earnings method because MidSouth's PE ratio is substantially higher than that of its peers, which yields an unrealistically high target price. We also excluded the dividend discount model from our valuation because MidSouth's dividend rate fluctuated significantly before 2008 and has remained constant ever since. A volatile dividend rate makes it difficult to accurately forecast future dividends, which compromises the credibility of the calculation. The Burkenroad reports are produced solely as a part of an educational program of Tulane University's A.B. Freeman School of Business. The reports are not investment advice, and you should not and may not rely on them in making any investment decision. You should consult an investment professional and/or conduct your own primary research regarding any potential investment.